If you click on this video, you probably own a property and are tired of paying way too much for your mortgage. But the problem is, most solutions that gurus provide out there are either something very basic, like just living below your means, or the saving is just so little they are barely worth your time. Well, in this video, I'll show you how you can use your credit cards to pay off your mortgage a lot faster while costing you nothing. I'll also discuss the risk associated and how to overcome them. Now, before we start, if you guys would like all insights on real estate, stocks, crypto, the economy, and cycles, make sure you subscribe to my newsletter down in the description below. Now, before I show you how credit cards can be used to reduce your mortgage payment, you need to understand how mortgage repayments work with an offset account, since this plays a very big role in paying off your mortgage faster. So first question, what is an offset account? An offset account is pretty much just a bank account that the bank provides you after you get a mortgage with them. It's an account that's linked directly to your mortgage, and you can deposit money into here and withdraw from here as much and as often as you like. So why do you even need this? Well, an offset account is extremely useful because the interest that the bank charges you is based off your mortgage minus what is in your offset account, and this is done on a daily basis. Now remember this, daily basis. It's a very important point, so do remember. So the more money you have sitting in your offset account, the less interest you pay pretty much. Therefore, the goal here is to have as much money as you can in your offset account. So where do credit cards really fall into this? Well, that's step number 2. When you do get a credit card, there's something called the interest-free period. That's the amount of time between when you make your purchase on the first day of a new statement period and the due date of when you have to pay off your credit card. After this period, the bank will charge you interest on what you actually owe them, and this is calculated at the end of the interest-free period. The interest-free period usually varies from bank to bank, but it tends to be on the average of 55 days. So how does this all help you? Well, the key lies in how often interests are calculated. Now remember, your mortgage interest payment is calculated daily, while your credit card interest is only calculated based on your balance at the end of the interest-free period. And this difference in how interest is calculated is where we profit. Now listen carefully, because this is the most important part. What you do is that every time you get paid and have an incoming cash flow, instead of using that to pay off your living expenses, rent, etc., you put them straight into the offset account right away. And you pay for your living expenses using your credit card. And this works so well because you're topping up your balance in your offset account as soon as you can, which reduces the amount of your mortgage payments that are calculated from. Remember, your mortgage interest expense is calculated daily, and the interest based off your mortgage is based off your mortgage minus your offset account balance. So the faster and longer you can top up your offset account, the more money you have in there, the less you pay in mortgage payment. So that's the goal. And your credit card interest expense, you don't even have to worry about that for 55 days. You can use that card to pay all your living costs and set up an automatic debit system with your offset account to pay off your credit card balance on the 55th day every single time. Hence, your credit card balance at the end of the interest-free period is always going to be 0, and you pay nothing in interest. So if you're really good with money and you're able to plan ahead, this is what you do. However, there are risks with this solution. If you're bad with money, this might not be a good idea. If you're someone who splurges on credit cards, this will end up costing you more than it gains. And if it comes to that, I would suggest just having a normal debit card and saving your money. Read a few books, cleanse your minds, and just separate yourselves from addictions. Well, there you have it. Do let me know what you think about this use of credit card in the comment section down below. And if you want to see further insights about the real estate market, the cycles, and crypto and stocks, make sure you subscribe because I'll be revealing more insights very, very soon.